stock market in Asia just hit a number that has never been seen before in its entire history. This is Kenya News Update today. Coming up, you'll discover how a political earthquake in Japan is sending shockwaves through global finance, why Wall Street is suddenly looking nervous, and what this means for your investments. The Nikkei 225, Japan's most famous stock index, just smashed through 58,000 points for the very first time. But here's the twist. This isn't just about numbers on a screen. This is about a brand new political reality. Meet Prime Minister Sani Takaichi. Her party just won a landslide victory in a snap election, and global investors are betting everything on her. For years, Japan's market was seen as sleepy. Not anymore. This is the so-called Takaichi trade, a wave of pure confidence flooding into Japanese stocks, but here's what nobody's talking about. This rally is happening while the rest of the world gets a major economic shock. Overnight, a blockbuster U.S. jobs report showed the American economy added 130,000 jobs in January. That's more than double what economists predicted. That strong data is a massive problem for anyone hoping for lower interest rates from the Federal Reserve. It sent Wall Street into a tailspin. The Dow Jones snapped a 3-day win streak. The Nasdaq dropped. Yet in Asia, they shrugged it off. Japan's Topix index climbed 0.68%. South Korea's Kospi jumped to a record high of 5,466.9 points. Singapore's benchmark crossed 5,000 for the first time ever. Australia's market was up. This is a stunning divergence. One continent sees strong data as a threat, the other sees political stability as an unstoppable opportunity. And then, something shocking happened. While stocks soar, there's a silent alarm bell ringing. The global investment firm GMO issued a stark warning. They say if the Japanese yen weakens further and approaches 160 against the US dollar, the risk of government intervention skyrockets. It's a high-wire act. Celebrate the stock boom, but fear the currency crash. This creates a massive tension for global portfolios. Do you chase the hottest market in the world, knowing a currency crisis could wipe out your gains overnight? Meanwhile, back in the US, the story is completely different. The Trump administration is now overseeing an economy so strong it's forcing the Fed to rethink everything. That January jobs number of 130,000 is a sledgehammer to expectations for rate cuts. It follows other data showing consumer spending was flat in December, missing expectations. The message is clear. The American job engine is roaring, but the consumer might be tapping the brakes. This puts the Fed in a box, and it puts investors on a razor's edge. So what does this mean for you? For Kenya and for markets everywhere? This isn't just a Japanese story. This is a story about where smart money flows when political certainty collides with global economic uncertainty. Some analysts see Japan's rally as the start of a new multi-year bull run, powered by a prime minister with a powerful mandate. Others see it as a bubble inflated by political euphoria, ready to pop at the first sign of trouble. But the biggest question remains unanswered. Can one country's political victory truly inoculate its markets from the entire world's economic tremors? The Nikkei hit 58,000. Wall Street stumbled on strong data. And the entire financial world is watching to see which narrative wins. Do you think this Japanese rally is sustainable, or is it a dangerous bubble? Drop your take in the comments. Subscribe to Kenya News Update today for more breaking global financial news.